Hello, everyone, to GIF NFP Day. Everyone doing okay? Arena, Shahab, how are you? Marco, Gorkum, how's it going, buddy? Hugo, and of course, Alexander, even though I'm saying hi to you last, you were here first. So I know you had to take care of the kids yesterday. Michael Schneider, nice to meet you. Scott Henderson, it was nice to meet you a few years ago. Okay, so let's take a look around. Getting ready to react to it. Stock indexes are going into this making new highs. I think we're right at them now on the NASDAQ. And we've been making successive new highs in S&Ps. I'm tempted that if the market likes it and we trade 43.40 or so after the number to take a shot in the S&Ps. They're not confirming. We're in this time window and now we're at this price window. So I said strength into month's end, so it's following through early. And here we have the NASDAQ making a new high. I believe, yes, we are by a few pips, 10 pips, I believe. And the NASDAQ as well is not confirming. Look at this 4-hour divergence here. It's glaring. See that? It's even more glaring than it is in the S&Ps. See? So NASDAQ is still going to be my preferred short. You know, yields are working to the advantage of big tech. But if yields reverse on this, that could be a little bit of a problem. Getting some decent follow through in gold. I thought after what we saw yesterday, and I still do think this is not the low, but only the second drive. I think there's another low coming, 1740-ish or so, and silver demonstrating relative weakness to gold. As you can see, gold took out yesterday's highs. Silver's trying to recover from this little sell-off yesterday and putting in a pin bar. I still think silver has lower lows to make as well. Gosh, even oil has come off a little bit. So far the OPEC news is a spike high. Be pretty classic if we peaked on an OPEC announcement. Hello, Monica and Mustafa. I have Charlie Gasparino at the bottom of the hour, and I'm going to let him get political, okay? Because, you know, I have to dance around so that we're not. But it's going to be wide open with Charlie today. Okay, so stick around. Maybe we'll have some controversial things to say. And everyone gets pissed off. How about that? I look forward to everyone getting pissed off. How about you guys? Won't that be fun? Yeah, Charlie's pretty political. Yeah. You know, he worked for Fox, writes for the Post. Yeah. So anyway, yeah, sounds like fun. Yeah. Okay. All right. So I don't think Blake is here. He's involved in some duel. I don't know if they're using firearms or just their mouses. Is it a duel?
Pistols at dawn.
Huh? I don't. All I know is I know that Blake knows how to shoot, so you know I wouldn't want to be taking 10 paces with him. But we got the rest of the crew with us. Good morning, Stell. How are you, buddy?
I'm very well, Coach. How is everybody else?
Okay, so we
Happy
all
Friday.
know that. Yeah.
Happy carols.
The whisper number.
Whisper number.
Yeah, so that's a big deal. You know, we'll see if we get 1 million. We're due to surprise to the upside. What if it's 1.5 or something like that? Except we know people are still getting checks here. and a lot of bus boys are being selective about their next job. They're looking to be a CEO of a company until the money runs out, and then they might have to go back to the restaurant. Anyway, and what if it goes the other way? Paul's asking, and it could be a third disappointment.
Yes,
Yeah,
that's a very good question.
Yeah.
Let me take the screen and I will start. I know Steve's going to be here with us in a little bit.
It's going to cost you about $100 a minute controlling the screen.
Hold on, I have a new Mac and I need to tell it that I allow Zoom to take control.
Yeah, tell your robot laptop.
I need to quit. It's telling me I need to quit Zoom and reopen. So give me 1 minute and I'll be right back.
Sure. Okay, so I'll keep babbling. Anyway, Canada.
Hey, Dale, I'm here.
Okay, Steve will babble. Go ahead, buddy.
No, I just joined. Are you?
Okay. All right. So
just wanted to make sure I tell you.
Okay. So what do you think, Steve? Third week number in a row. Any surprise? Will the market react? S&P's coming in at new highs prior to the number.
I have no idea what the number is going to be. Obviously, right?
Yeah.
How could I?
Yeah.
I'm a lot of things, but a medium is not one of them.
All right, I'm back, guys.
Okay.
All right.
So go ahead, grab the charts, bro.
I'll grab the charts and then I'll talk about a few things and then Steve can take over. I think I got it. There we go.
You got it. Yeah.
First of all, we have to think about the number and why it's important. So the Fed has a dual mandate. They have a mandate for inflation and for employment. Inflation is screaming higher, but they're assuring us that this is transitory and it's going to be back very soon or soonish. So this is something that we're supposed to ignore for now. The other mandate is obviously employment, and we had a big drop after COVID. I mean, it was massive. Then they have the checks keep coming in. Employment is dropping because, hey, people don't need to work. They make more money staying at home. So now we're starting to see people coming back. We've had 2 weak numbers in a row, or weaker than the markets expected. And now, once again, even though the official number, I think, is 700 that we're expecting, everybody seems to be talking about 800, 900, million, 1,000,005. I've heard everything. So, you have to ask yourself, just like Paul very correctly wrote on the chat, what happens if we get a weak number? I think the Fed has kind of started preparing us for the eventuality of tapering whenever that comes. But if we don't get a strong number, if we get something below 700 or even 700, then they have the excuse to say, oh, you know what, employment is still not where we want it to be. And also average earnings growth, that needs to go up, because if you have inflation and costs going up, you have to have earnings going up so that the economy can be sustained and you can have spending, because otherwise your disposable income just drops and you can't spend. So it doesn't matter if more people go into jobs, if these jobs are not paying well enough, or the raises that they get are not keeping up with inflation, then there's a problem. So I think I think the risk on this occasion, this print, is that the market gets disappointed. Obviously, I don't know what the number is. The number could be huge, but I'm just saying that I think if the number is a little bit higher than expected, so we're expecting 700, if it comes in at 850, I think the market gets probably a little bit optimistic, but nothing really happens. I think up to anything like 1 million new jobs, I think the market is going to be a little bit happy. The dollar is going to rally a bit, but I don't think it's going to be substantial. You need a big outlier number for this to actually go. And if the number comes in at 700 or lower, I think the market is going to be quite disappointed. So this is the risk for me. I think that the dollar could go higher. If we do get something really good, I think we could go higher. We're going to be testing these, we could be testing these highs. What is it, 93.30 or something like that? If these go, then we're heading towards a 38.2, which will probably coincide with the, what's this, 200 DMA, which is at around 90.
Nice confluence.
Yeah, 94.50 or whatever that is. It could easily, you could get up there. And
Sure.
The market has been short dollars, and they like Blake keeps saying here on Face, the call for the year 2021 has been, oh, dollar is going to weaken. And here we've said that as well, right? My medium-term view for the dollar is that it's going lower, but we've been saying with Steve, look, watch out. This could be a time when the dollar turns higher. We had this support here, kind of almost a double bottom. It was I wouldn't say a very high probability event, but it's something that could well happen. And look, it's manifesting. So the dollar could rally, but I think that any kind of rally towards this 94.50 in the DXY should be a selling opportunity. That's my view.
Still, I saw someone, I forgot who it was. It may have been Peter Brandt. I'm not sure who, but this whole picture you're showing in the dollar could be interpreted as a bullish formation, some type of, I forgot what the Elliott formation would be. Maybe Steve knows, but that some type of corrective pattern down to the recent lows that we've had. Anyway, just throwing it out there, because no one, I'm with you. I think we rallied 95, 96 and then failed. But anyone who's an expert, if they look at this, because it came off of a big rally into COVID before it sold off again, and also in 2017. So like it could be just years of consolidation implying an upside breakout. So I'm just being the devil's advocate that it could be interpreted as a bullish formation and we completed a correction.
Well, it could be a lot of things. I just think, for the big picture, I find it very difficult to see the dollar strengthening substantially over the medium term. First of all, because the world needs a weak dollar. Emerging market countries, they have all this dollar denominated debt. They need a weak dollar, and the dollar is the world reserve currency. So it has to be, it's almost forced to not stay strong for a prolonged period of time. But I think the main reason, I think, is still the deficits. They're huge. So you just,
they're not just huge. It's the trajectory is what's even more scary about the deficits.
Yeah.
I'm not talking about the debt.
Exponentially.
Yes, Steve, you have a little knowledge in Elliott. Could this be a corrective pattern? This whole thing that Stella's showing?
Oh, you mean what I see in the screen, the whole thing?
Yeah.
Yeah, of course it can.
Because it's coming off a big run and it's moved sideways for what, 5 years now?
Yes, of course it can. But I never pay attention to
the formations.
To formations that need multiple years to unfold. You know what I mean?
Okay.
Because you can be dead. I mean, if we assume this is a correct information, literally, we could be dead until this breaks to the upside. You know what I mean? And who knows what happens until then?
Yeah, we could get Delta.
Yeah, I mean, I'm always in the top-down camp, right? Analysis, but up to a point. I mean, I don't care to start measuring formations that might take 15 years to unfold.
Well, you'll still be young.
Yeah.
We'll see about that.
Add 15 years to your age, Steve, and I'd be happy to be that. All right, man.
So anyhow, listen, my thesis here is very, very basic, right? If we assume that the market's optimism gets confirmed, the logical thing to expect to happen is another move higher in yields. Perhaps this is going to be the catalyst to break out in yields to the upside. Stelios is showing the inverse, which is the bond itself. Yields are the exact inverse. A breakdown in the bonds, which would mean a breakout in the yields. At the same time, another leg higher in the dollar. And now, under normal circumstances, in a somewhat normal economy and somewhat normal financial markets, that would also imply a move higher in equities. So good news in a normal economy should be positive the currency, positive the markets, the stock markets, right? Now, I don't expect that this is going to happen, though, in this case, because good news, I mean, a blowout number, a blowout positive number, will immediately. I'm not rejecting the possibility of seeing an initial reaction higher, like a knee-jerk reaction higher in equities as well. But I think that even if that happens, the markets will quickly rethink and realize that this perhaps brings the Fed somewhat closer to acting. And markets that are almost exclusively that are basing almost exclusively their valuations on quantitative easing and deeply negative interest rates are not going to like that.
I think,
so,
Steve, I think the markets know now very well that any kind of tapering or tightening is going to be bad for the markets. We saw that on the Fed,
yes,
on the FOMC, when they mentioned it's time to start thinking about talking about tapering, and straight away equities went lower.
Yes.
Obviously, they reversed afterwards because people still think, you know what? No, this is transitory. They're not going to do anything.
Plus, we got some statements as always to soften the exactly. So basically, market expectations get confirmed. Breakdown in treasuries, which means a breakout in yields. Another leg higher starts in the dollar, but probably a nice pullback might be beginning in equities, which are in any case in need of some kind of a corrective move, right? I mean, we've had a massive move higher during the past 15 months, and in essence, we've had zero corrections, right? So perhaps this can even be the catalyst to see a healthy. For these markets to have a healthy correction, you need a 70% lower. But anyhow, to get some kind of a move lower.
How about 30?
Yeah, the issue is if the markets go down 25-30%, you know that the central banks are going to come in and they're going to do more. So I think that any drawdowns in equities now are going to be more shallow than they should have been.
Yeah, so, we started talking about the Bernanke put as a serious thing, and it was a serious thing like 13 years ago.
Yeah.
But I think that the central bank put, irrespective of who's in charge, has become even more dominant since. I mean, back then, I remember that we even had, some decent sell-offs. Nowadays, they've almost forbidden any type of.
We had a 30% drop on COVID, and this was a once in a generation kind of event. It was huge.
Yeah,
and it was a 30%. And if I scroll back a little bit, it was like given the recent run, it was a blip. It was
and forget the 30%. I mean, if you look at it in the perspective of how long it lasted, right? It was literally like a blip. I mean, how long was it?
2 monthly candles. There you go. And then
but I think it was less than. It was much less than 8 weeks. It was like 3 weeks, 4 weeks, something like that. So even during the worst black swan we've had in decades probably, they didn't let the markets move lower more than roughly a month in total.
And look at the rates. I mean, look at the angle of this.
It's
just
has
unsustainable.
Gone completely parabolic. Yes.
NASDAQ has a weaker RSI structure. If you want to see more glaring divergence in NASDAQ 100. So, I mean, if you go to the weekly compared to the S&Ps, then go the S&Ps, and then go the, so that is weaker.
It does look, it's not as, straight line as the other one, but still, even NASDAQ is still performing well. Anyway,
in any case, chasing the stock markets up here, being where we are, having seen the move we've had ahead of event risk, as I said, it's a little bit weird because the markets at the same time are optimistic that the data are going to be good, but I fail to see how really good data are going to be interpreted as a positive thing from the stock market.
Yes, I agree 100%. And I tweeted that a couple of days ago. I said, look, we have to think about what's been driving the markets higher since the global financial crisis. And it's been zero rates and just expansionary monetary policy. And the minute this reverses, then markets have no way to go but down. Not, it depends on how big the correction is going to be, but there will be a correction. So I'm with you 100%. A good number cannot mean higher stocks. It just cannot, at least not the way things are at the moment.
Yeah. Now, the only thing I'm not sure about is what's going to happen if we have an okay number. About that, I'm not sure. Logic says, especially since we are in the middle of summer, that if the number is just okay, the markets are going to go back to their normal, normal, put it in quotes.
Doldrums.
Yeah, to the normal mode, which is probably the slow grind higher is going to continue. Now, if the grind higher is slow, there is even the possibility to see a little bit more strength in the dollar, despite equity markets moving higher, if that move is, slow and patient. But I think that bad data will probably be dollar negative and equity market positive. So and so or okay data are going to be probably neutral for the dollar because it's in rebound mode, neutral to positive for the dollar, and positive for the stock markets. But I don't expect like a pace that's going to be like with a lot of momentum. I think that it's going to be a grind, and I think that really good data is going to be dollar positive, yield positive, but stock market negative.
I agree, and I still think yields are going to be the trigger for any risk of move if we see
exactly
one. I have to say that again and again and again. Okay.
Where do you think yields are going, guys? I mean, I look at the 10-year and I flip from bullish to bearish every day. I could make a case for 130, and
I haven't changed my mind in yields for a long time because we've had this move lower, which is definitely corrective in nature. At least that's how it looks to me. Theoretically speaking, we could pull back even further within the corrective channel I'm monitoring. Stella, you want me to grab the screen?
Yeah, go for it.
Okay. So within this corrective channel that we see here, we can definitely, we drew that some time ago, and we can now readjust. So
that's what I see.
Theoretically speaking, we can go even lower before we break out, but I do think that and the eventuality in what we're seeing here is that the break is going to be to the upside. We have the opposite than what we have in the stock markets. We have a slow grind lower, but I think that the next decent move is to the upside, not to the downside.
I agree. We need to have
now
yields higher.
The question where the target of this move might prove to be, I think it can easily be 2%. Easily. So we break higher, I think 185 to 2% is going to be the next stop. And by next stop, I don't necessarily mean the area where we're going to get rejected and move lower. I mean the next resistance. And we take it from there. We see how it goes from there.
Yeah, I want to get short the bonds again and treasuries. And
speaking of which, Stelios, since you mentioned it, the bonds have been have just very recently broken out from this bull flag, which means that within, just to put things in context, we're still within this very, very large formation. But the recent breakout that we had a couple of days ago out of this bull flag definitely implies another move higher, with next resistance being close to 174. So short term speaking, I don't see the bearish case scenario for the bonds, just short term speaking, right? So I'm not expecting the bonds to reverse like today or tomorrow or the day after. From what I see here, I see more or less this move extending somewhat higher before we can see. Now, in general, yes, I do think that the bonds must move a lot lower eventually. So yields in the Eurozone should move higher eventually as well.
I mean, it's a total mispricing of risk. You have 5-year Greece, which is negative.
Total,
but below 1%.
But you know, when you have this conversation, I've been having the same type of conversation when it has to do with cryptocurrencies, and not for the reason people expect, since they know that I'm not a lover or so. For the opposite, meaning you can't make an argument that X or Y or Z cryptocurrency is like super mispriced and then want to see it go lower immediately, because when the axiom is that something is completely mispriced, then you cannot make the argument that it has to go down.
Yeah,
because
exactly.
When something is completely mispriced, nothing stops it from being even more mispriced later on, before gravity can take hold of it, right? Because eventually fundamentals do matter, but you know, as in any bubble, and be sure, we have the biggest bubble out there, upon which all the rest of the bubbles are built, are the fixed income bubble. So yeah, I mean, who knows?
So higher rates will pop that bubble.
Oh, high rates will pop all bubbles. Be sure about that.
Especially that one.
And the bond market is the biggest market in the world, right? So when that starts
besides currencies, yeah.
And just, you know, just on comparative basis, and from the obvious logic of what's the expression? Alternative, it's, I mean, money competes for a return, right? So when it doesn't find that return in fixed income, it has to find it somewhere else. Now, if things reverse and you can find some return in fixed income once again, that means that a lot of people that are not by default risk takers will find a refuge once again in fixed income, which means that they're going to be taking their money from things that are currently in, you know, extremely elevated valuations, and they're going to be putting them there. What does that mean for the stock market? What does that mean for anything that's speculative, cryptocurrencies or whatever else? It means that they will have to deflate. As simple as that. It's an inescapable reality.
Absolutely. Speaking about cryptos, Bitcoin is going lower again, and it's kind of going to try to test that flag that we've been in for a while now, bearish flag, and we broke it.
As I said some time ago, everybody knows the pressure point for
26,000. Yes.
I mean, you know, call me whatever you want, but I find it almost impossible for the market not to go for it. I mean, the market is very, very, very vicious, and everybody knows that level. I think that level is going to be tested and probably taken out as well.
It's very likely, I think.
Yes. Yeah. So that means that I'm extremely skeptical about cryptocurrencies. I wouldn't be buying them in the short term for any reason. I think there is more downside to go before the market can actually, recover.
Great. Okay, well, we have a minute left or something like that. So
yeah, we have 1 minute 20 seconds left for the data. Let me see what we want to be tracking when data come out. USD yen is definitely sensitive.
Probably the one that's going to move quicker.
The euro, the S&P, of course, the cable, gold as well. Let's look at gold as well. Let me bring the 4-hour charts also here. Probably it's a better idea to have a look on the
1-minute chart up for the reaction. That's what Blake does.
I don't use the 1-minute chart
for
whatever reason.
And then if there's a 15-pip move, we could go, wow.
Oh my God!
Massive.
Oh, look at that!
Massive. They're destroying the market. And, you know, it's going to be like 0.2% lower. Okay, let's pull up
all
data.
Brokers want you to use a tick chart.
Of course they do. You're going to be trading all the time and making commissions for them all the time.
Okay, so
moment of truth.
For the most important payroll numbers since the Babylonian War, I don't know, since the old ages. Okay, let's go.
Come on.
850.
There we go.
Okay, so it's a little bit better.
Okay, so it's better.
Average hourly earnings is worse than expected, though revisions are lower as well. So
unemployment worse. I'm assuming that means that we got some increased participation, which makes sense. I'll explain later why.
No, it's unchanged.
Look at manufacturing payrolls, Stelio.
Wow, no, it's only small though.
Look at Canadian building permits, by the way.
Yeah, that was a huge miss.
So trade balance, yeah, who cares? Unfortunately, nobody watches trade balance anymore. I mean, it's a ridiculous number. But non-farm payrolls, we even had a small revision higher to the prior month. Data revised 24,000 higher.
They took gold down pretty good.
Yeah, let's pull gold. Since you
it was up,
it.
it was up 0.5%. It's now flat. Okay, metals are usually the ones that react.
Yeah, they take it
more violently. Yeah, exactly.
Now, not unexpectedly, equity markets like it for the time being. Here's the 4-hour S&P chart. So it's at the highs of the day. Actually, it's at all-time highs as we speak. So S&P at all-time highs. I'm assuming the same applies to the Nasdaq. Yep, at all-time highs as well. Now, as I said before, call me, a skeptist, but I doubt it that when the markets digest this data, they're going to keep on liking it, for all the reasons we explained before. As I said prior to this, I don't consider it unlikely for the market to react for the stock markets to react positively to good data as a knee-jerk reaction, but I have a big doubt that they can sustain gains because, as we said, market participants are going to start thinking, okay, does this mean that the Fed moves sooner? And that's something stock markets won't like. Having said that, dollar is giving back its gains. I mean, look at the euro.
We've gone right back to where we were.
Yeah.
Same with metals, same with everything.
Right
so
to where we were.
It's a non-event.
For the time being. For the time being. Let me pull the DXY.
Okay, and we do have Charlie, so let's not eat up too much into.
Charlie's not here.
Oh, he's not here. Okay.
Yeah, dollar reversing lower. Actually, I wouldn't pay so much attention to this for the time being. I wouldn't pay so much attention to it. I mean, it's too soon. It's too soon to tell. It's too soon to tell. Yeah.
Canada coming off pretty good.
Let's have a look at the USD CAD because we also had Canadian data, true.
And cable as well. Let's have a look.
USD CAD turning lower. Worth paying attention to this.
Which is interesting because the Canadian numbers were pretty weak.
We might be in some kind of a more complex move here.
Yeah, ABC. Oh, okay.
Something like this.
So now take out that prior low.
Yeah.
At 22.5.
Yeah, it is likely. Very, very nice reversal here. Look at this reversal on the 4-hour chart in the DXY.
How about Aussie? Aussie turning.
Quite a nice reversal for the time being. Aussie and Kiwi, let's have a look at them. Here's Kiwi. Bulls engulfing on the 4-hour chart. I assume the same thing. Yep. Aussie even had a lower low. Kiwi didn't. Yeah. In any case, I think we need to give the market a little bit more time to digest the data.
Oh, Charlie's here. I can see him, Dale.
Yeah.
Okay. Cool. So that will give us more time to see what's happening and go through everything in
45 minutes. 40 minutes.
40 minutes from now. Yes. So see you there. Enjoy the interview, Dale.
Okay. Thank you, guys.
Thank you, Dale.
All right. Welcome back, Charlie.
Hey, thanks for having me, Dale.
How you doing, man?
Good. Can you see me?
Not yet. You have to the video
Gotcha.
on here. I'll do. All right. So
I'm in my apartment here, so let me.
Okay. All right. Well,
get you some light here.
I'm in my home, and I haven't shaved for a few days, but we'll just get rough and ready to talk about things today, Charlie. Why don't we start with that article that you wrote that Gensler was going to be tough on Robinhood, and you were talking about that they were going to have to change their suitability and educate traders, and he wasn't even talking about fines. And I said, oh, come on, Charlie, that's like a slap on the wrist. I said, send in FINRA. And FINRA, right? Remember that? And
well, FINRA, just so you know, works for the SEC essentially.
Yeah,
right?
Yeah, I know. It's like the CFTC and the NFA.
Yeah.
But they slapped the biggest fine on Robinhood, I think, for a broker dealer in history.
Yeah, it was pretty. It was a lot of money. They were under intense pressure, obviously, to settle, and the reason why is because you rather settle it and not have to disclose it than settle it and say we are in the middle of negotiations with FINRA on a major blah 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 blah. And if you look, the S1 came out, which has voluminous disclosures, and one of the interesting disclosures is that it sort of mentions that it has some regulatory issues, but there's not a lot of, there's not a lot of meat there to that disclosure. And the reason why is because it settled the big one, and this was it. And this was the one that if they would have put it in the S1, we would have been talking about this until the IPO. We were going to say they face a major regulatory probe, and it would have been
that was another motivating factor for them to settle, to get the IPO
and
off.
FINRA knew it. FINRA kind of knew they had them over the barrel on that.
Yeah, well, they know that if you're licensed in anything, you're over a barrel. So anything you're regulated on, right?
Yeah, and you know what I found interesting, because I read the S1, is that until the GameStop stuff happened, and they weren't really profitable until like recently.
Yeah.
They started becoming profitable this year. Now the user growth picked up during the pandemic, no doubt about that, right?
Yeah.
But the frenzy surrounding AMC and all that definitely added to their bottom line, because they turned profitable in the first quarter. The other interesting thing I thought from the S1 is they said, now that the pandemic is ending, we might have it might impact our business negatively, because people are not going to be stuck home trading. People might have to go back to work and stuff like that. So it was some interesting stuff in there.
Yeah, there's going to be, and a lot of people do not want to go back to work. A lot of people relocated, thought they'd never have to go back to the office, and their long-term vacations when they moved out to the country, they may have to go back to their homes. Kids will go back to school, and the pandemic vacation might be over. But you brought up GameStop. You drew a parallel to the meme stocks and Freddie and Fannie. Can you tell our viewers what the similarities are between the two?
Well,
I do remember, Fannie before the 2008 crisis, and it was a pretty liquid stock. I used to buy calls and puts in it. So what's the comparison here? Was it really as much of a mania in Fannie Mae and Freddie Mac as in GameStop?
By the way, I'm taking my balance, and I'm taking my Balance of Nature vitamins right now.
Okay. Yeah, you looked a little. Oh, look, you're back in balance. All right. So
here's what I would say. I would say. The parallel is the sort of cult-like social media obsession of the investors particularly the retail investors that got involved in Fannie and Freddie, who believe it was almost this weird cult that Fannie and Freddie needed to be saved. They needed to be, released by the government. They needed to stop paying the government money, ignoring all the facts that Fannie and Freddie over the years there were scandals, accounting scandals involved in Fannie and Freddie, that they were taking unusual risks because they were essentially backed up by the government, and the government took it over because it was going to blow up, and that would have been it for the 30-year mortgage, and it was insolvent. And if you didn't pay off the bondholders, if you didn't make good on the debt, if the debt is considered AAA like it was in the past, bondholders across the world would have doubted whether we pay off, whether we were backing the U.S. Treasury bonds. So they ignore that. They would attack anybody that brought up the notion that this thing only exists and only can make money because it's backed up by the government. And so all that logic was ignored, and it was ignored for like 10 years as this thing kept going through various iterations in the Obama administration, and Trump was talking about privatizing it, even though it was extremely difficult to privatize. And then there was court cases, and all I was saying was this: the same irrational exuberance that you see around Fannie and Freddie, you are seeing in GameStop and particularly AMC. That somehow AMC is this thing that needs to be saved. It's the greatest company. It's being attacked by short sellers and want to put it out of business. No, that there are like dark forces at work that operate in dark pools that are doing naked short selling. No evidence of that. And that it's the little guy sticking it to the big guy and making the markets right. And that's what all this is behind at AMC, which, now that the pandemic is waning and it's almost over here in the US, AMC stock is going to go through the moon. That's the words that these AMC, as they call themselves, apes use. And, never stop rising because people are miraculously going to go back to the movies, even though they weren't going back to the movies before the pandemic. And then there's the social media aspect of it, which is the same thing. Obnoxious, vile, disgusting trolling that goes on anybody that dares to question that investment thesis. And it's almost it's the same thing as what went on with Fannie and Freddie. And I just said, and my point was like, listen, the irrational exuberance of crowds, it went on 10 years with Fannie and Freddie. This thing could go on for a while longer. I mean, there are obviously structural differences. One of the things that kept Fannie and Freddie, kept hope alive, so to speak, Fannie and Freddie being released in a way that was positive to people who owned the common stock, which was a penny stock for even in its best days, it was trading below $5, and it was an OTC stock. Sometimes it would go as high as $5, but remember, after the takeover, it was trading at pennies, like below $1. The court cases involving that this was an illegal takeover that big hedge funds mounted. That's that was real, and that kept them hope alive. Obviously, there's not that with AMC. It's different. I mean, AMC actually is not in bankruptcy. It's not in conservatorship. It's actually a viable company so far. And the CEO actually is doing a smart thing by using this irrational exuberance around the stock to issue more stock and to pay down debt. And because he knows that this is maybe his once in a lifetime way to save the company on the backs of this mania around current shareholders, small guys thinking that this thing is going to the moon. He's literally using their irrational exuberance to dilute their position in the company. And
didn't he do a conference or press call without his pants on? People were debating. When people were debating whether that or not that was a PR move or not.
Somebody told me that. I just so you know, I like the guy, Adam Aron. He's a really nice guy.
I think he was trying to give people like the risk disclaimer. You could lose your pants.
Maybe listen, Dave. I will give him this too. I mean, you can't really blame the company for a lot of this stuff. Listen, I think he's done some stuff that I wouldn't recommend. Like he was saying, I think they were giving free popcorn if you're a shareholder or something. It was like kind of stupid incentives. But he's done from an operational standpoint probably the right thing. He went out and actually said. They put out statements. If you buy the stock at these levels, prepare to lose everything. I mean, he said it, and they still bought it. And he said, what do you do with that? If you're the CEO of a company like AMC that needs cash, well, you use that irrational exuberance, and that's what he's doing.
they turned around their whole fortune with being able to finance a company with secondaries and bonds, etc. I don't think I've seen you write about this, but I'm curious because a lot of money flows going back into the big cap tech in the last few months, and there's still talk of antitrust action. And I guess there was some ruling that was favorable for Facebook earlier in the week. Do you think that there's going to be any action to break up these companies under this administration? You think?
Well, you got to read tea leaves to a certain extent. Look at who they're putting in these key positions. Now, the SEC is not really a breakup. The Securities Exchange Commission, not really an entity that breaks up companies, but they put in as the head of enforcement. So under Gary Gensler, a guy, the U.S. attorney, I think from New Jersey, who was the Attorney General of New Jersey, who brought cases against Amazon, and he's been very big on those types of cases. They put in a woman, a 33-year-old woman, in the head of the FTC, who wrote a paper a couple of years ago, a law school paper, about the need to break up Amazon, and that it was this giant that needs to be broken apart before it unleashes all sorts of bad stuff on America. Although the paper was pretty scant on details about exactly how Amazon right now is using its sort of monopoly status to raise money, to raise prices, which it's not. And one of the reasons why is because it's not really monopoly right now. I mean, Amazon does have competitors, particularly Walmart.com and others. So, these are the types of people that Joe Biden has appointed to major positions. Elizabeth Warren would love to break up Amazon. She's very key in the regulatory apparatus of the Biden administration. And I think you also have to look at who Biden is going to put in as the head of the antitrust division of the Justice Department. It's another key position in terms of
unfilled.
It's an acting. A lot of people are talking about the DC Attorney General, Karl Racine, who actually has brought a case against Amazon to break them up as well. So if he gets that job, the tea leaves would say regulatory assault coming. You would think there would be some sort of a market reaction. The one thing, though, I think, which investors...
Tim Cook is worried, though, Charlie. He called Nancy Pelosi, and I don't think it was for a date, because of his preferences, right? So he's worried about this.
Yes, and I would just say this: the courts have been much more skeptical than the regulators, right?
Yeah.
So just remember that if you go bearish on tech, the courts are saying, not so fast. Look at what happened to Facebook. Yeah. From an antitrust standpoint, you really have to turn the Bork model of antitrust, of interpreting the Sherman Act by Bob Bork, on its head. You remember that was consumer harm is the sort of fundamental basis of antitrust. That's what Bob Bork, as I guess Solicitor General back in the Reagan administration, established, and as a legal scholar. Remember Bob Bork, the controversial, he wasn't that controversial. He became controversial during his Supreme Court confirmation hearings, which didn't get approved. But, that established, how we looked at antitrust law. The Biden people want to change that. A lot of these liberal progressives, including the woman that runs the FTC, Lena, I can't remember her name. It's escaping me right now. But you got to get the courts to change too. And the courts so far are not are really sticking to, adhering to the consumer harm. And if you think about it, Amazon is not harming consumers now, even if they are ready to harm it tomorrow, which is kind of what they argue. They're getting so much power, they're ready to drop the bomb on all of us. And all of a sudden your Amazon Prime ticket is going to cost $10 million.
Okay, I thought they were only going to drop drones on us. But there could be.
I'm just telling you that they haven't done it yet.
All right, so Charlie, I'm going to give you a platform. One of the most emotional pieces I've seen you write in a while was what you wrote this week about the indictments. I forgot the guy's name who.
Helen Weisselberg, the CFO.
That's right.
Of of the Trump organization.
Okay, so I'm not going to talk about Bill Cosby's release, but I want you. It has nothing to do with the markets,
Right.
you know, a lot. But you know, America's dad looked pretty frail. So anyway, why don't you tell us about your feelings about this indictment and why you feel that there's a lot of injustice on how this is happening, and if it happened
Well,
all the time to regular people, they'd be up in arms.
you know, I don't advocate if he did what they say he did. I don't think that's a good thing. You should pay your taxes on everything. You know, I do certainly. I just think that, and because I know a lot about this case, I've been reporting on the Cy Vance case for about a year. I was the first report that he actually assembled a task force of top forensic accountants and forensic and lawyers that are experts in tax law. He assembled this task force to go after Donald Trump and the Trump organization. From what I understand, he's been looking at this case for 5 years. The task force was established a lot recently when they thought they were ready. The rubber was going to meet the road. So I wrote that task force story in December with my then producers now at the New York Post, Lydia Moynihan. So, you know, I know that they've been spending a lot of time on this. 5 years from what I understand, 100 subpoenas, 3 million pages of documents. And you would think if you do all that, and remember, they're looking at 4 principal people in this alleged tax fraud scheme, and it stems largely from what Michael Cohen, the former Trump fixer, who turned on him later on in his, you know, in that famous Senate hearing where he said that Trump would inflate the value of his assets for insurance purposes, so you cover more of the assets, deflate it for tax purposes, so you pay fewer taxes, and that was tax fraud. And the guy who knew about that was Alan Weisselberg, the CFO. That's what Mr. Cohen said. So, you know, if you spend 5 years on that, and the principal people they were looking into in that scheme would be obviously Donald Trump and his 2 sons, Don Jr. and Eric, and probably Mr. Weisselberg because he's the CFO. Those are the principal people that run the businesses, right? I mean, there's other people involved, but those are the top ones. That's the ones you would look at. So you would think after 5 years of looking at that, where obviously Weisselberg's actions are material to your investigation, you would come up with a paper trail that points to much more than Trump being a nice guy and paying for the kids, his Weisselberg's kids, you know, education, right? You would get more than Weisselberg stayed at a hotel, at a Trump apartment when he wasn't in Florida. You would get more than these sort of like picayune perks. And by the way,
how about the revelation that for example, Ivanka, an employee of that company, of Trump's company, a couple million a year, also getting paid a consulting fee. I know in my career, I'm either an employee or an independent contractor as a consultant. Very unusual for
but that's not part of these charges. I don't think that's part of these charges. I you know, I have to look at the exact charges.
Yeah, they're saying that there were other people that participated in this type of scheme.
I'm just saying, listen, perks. You know, I saw one of the
but how's that a perk? How is being paid as an employee and receiving consulting fees a perk?
I don't know. And by the way, that's not part of this case. And my point is, and I keep seeing these chats come up, Charlie, the Trump organization rips off people all over the world. Okay, but that's not part of this case. You know, that I'm telling you that I know for a fact that the Manhattan DA, who's, by the way, the Manhattan DA, you know, there were bullets flying in Manhattan, all over Manhattan right now. You can't, you know, Times Square is filled with homeless. He's the top law enforcement official for the borough of Manhattan, which, you know, listen, has a long legacy out there. Bob Morgenthau, the great Bob Morgenthau, did this job for 50 years. He established an office that was based on integrity. He didn't bring every case that came to him. He certainly didn't bring a lot of picayune cases. You would think after all that, you know, that we really do get a fraud case against a tax fraud case. And they didn't get it. What they got was a bunch of perks that, you know, half of them probably are okay. You know, I mean, listen, there are IRS carve-outs on perks. Trust me on this. I know a little bit about this. So give me more. I mean, listen, I'm all for putting them in jail. I mean, you know, I'm just sick of prosecutors because I've seen it 1,000 times. I've covered white collar crime my entire career. I'm hardly a guy that's easy on the targets.
Well, then is it unusual for them to keep the grand jury open for another 6 months? Normally, after an indictment, isn't that the end of the grand jury phase, or not?
Well, it depends. Well, the investigation's ongoing, and they clearly want to flip the guy. Let me ask you this: use your common sense. If you have all these documents, all this stuff on Trump and this organization.
Yeah.
Why do you need him to flip?
Because probably because you need corroboration.
But why corroboration for what? You have the documents. It says what it says. I mean, you know, why do you need him to say X, Y, and Z? I mean,
I'm not sure.
You don't.
You shouldn't need that. Don't in every fraud case, isn't there? You know, to me, it seems more like a RICO case or a mafia case.
Listen, I've seen Rudy Giuliani work RICO cases over the years against Milken. I mean, Milken was
poor Milken.
a threatened RICO case. You know,
for what? Having an enlarged prostate or bond trading?
Yeah, I mean, he had a lot. I'm not going there, but he had real evidence against him. You know what I'm saying? And he had enough. So this is a little. They spent a lot of money on this. Trust me, this was the number one priority of the Manhattan DA was the Trump Organization tax fraud case that targeted Donald Trump himself, Don Jr., Eric Trump, and principally, and this guy Weisselberg, because he's the CFO. Those were the principal players. I mean, it doesn't take a rocket scientist to figure that out because those are the guys at the top. And maybe others. There's others, I'm sure, that are going to be involved. And by the way, there may be others that are charged with some of this perk stuff. I have no idea. Maybe everybody got perks that the advance doesn't like. But man, you should have something more. And everybody says, well, this is just the beginning. Why would you, if you're going to do something?
Yeah, bring your best material out up front.
He's out of office in a year. Why would he bring the crap out first? He's going to leave the good stuff to his successor, right? I mean, Cy Vance did not run for re-election. Right. There's going to be a different Manhattan DA, and I can't tell you who it is because I don't know. But I mean, he did 3 terms and he's done. So he's leaving office. And he's coming out of the box with the dumbest case, a perk case, And by the way, the unpaid taxes is going to be it's an again. It's usually why isn't the IRS involved in this? Why isn't the IRS indicting Donald Trump? I mean, listen, I know he was president, but even before he was president, he was under audit. Where was the case then? I don't. Some of this doesn't make sense. Everybody has always been questioning the taxes of the Trump organization, predating Donald Trump's presidency. When Barack Obama was in the White House, everybody was always, he's always been audited. That's why he never released his taxes, which I would have loved to have seen. The full thing would have been a great story in itself. But why isn't the IRS charging him now?
That's a great question too. lot of Teflon on Donald Trump.
Maybe it's,
don't you think?
Maybe, listen, all these rich guys, if there was one thing I I knew it. I didn't need ProPublica to tell me, but ProPublica put out this whole thing about rich people evading taxes, right? All these multi-gazillionaires. And
they're paying nothing.
And they had stolen documents. And, it was, I think it was, I wouldn't have published it because it really didn't tell us much, but it did.
It just pissed people off that pay taxes.
Yeah,
that was the whole reason for it, right?
Yeah, right. Because we all know that rich people, get their money on capital gains, and, blah blah blah. But it did tell us that these rich guys hire lawyers to figure out, loopholes in the tax law. Okay,
they don't use TurboTax.
Yes,
Charlie?
They don't use H&R Block. Okay,
Yeah.
I'm just telling you that
right.
that's what they do. And if you're in the real estate business, you do that on steroids apparently. So that's why I'm just saying I'm underwhelmed. I could be convinced that Mr. Weisselberg is the Wizard of Oz, and he's controlling all the stuff, and taking money from Russians, and and all these.
This never would have come up if Donald Trump was not president. If he had never become president, do you think?
I think that too, because I think if it was Donald Trump wasn't president, they would have went to Weisselberg and said, you owe, $1 million in backpack taxes, pay it. And here's a 10% fine on that. And then he could have adjudicated, he could have challenged it or whatever, I'm just saying, it's just, and by the way, no offense to anybody. I every time I see Hunter Biden, I actually feel badly for him because he was obviously a junkie. But where's the investigation into all the money he made overseas? If we're going to go down this political route, it should go both ways. Hunter Biden made a ton of money representing, doing stuff.
Different countries.
Countries. Where's the big sort of, okay, let's look at what he did. And was the old man involved in any way? Why are we doing that? I mean, it's by the way, the guy, half the time he was getting that money, he was a drug addict, which, all automatically leads you to do crazy stuff. I know Donald Jr. and Eric. I think they're good guys. I like them personally, just so you know. I'm just saying this. And I have nothing against Hunter Biden. Never met him. But they're not substance abusers and everything, yet they get treated like they're criminals. I'm just telling you, there's a double standard here. Okay.
And Charlie, you know what? I'm glad that I brought this subject up because by the way, somebody I know where you stand, but I mean, you make some valid points.
I was some guy body on the chat said Charlie's a Trumper.
Right.
You don't realize how much Trump used to complain about me and Neil Cavuto about what we've said about him, and we're holding his feet to the fire. I had dinner last night with a former Trump administration, or 2 nights ago, with a former Trump administration official who will remain nameless. It was her and a few other people. We went to Del Frisco's in Manhattan, and she said, "You were really nasty to Donald, to the president over the years." And I said, "I wasn't nasty. I was being fair. I call balls and strikes, and this is how I do it, and I'm doing it right here as well."
Okay. I appreciate it, Charlie. And it's always great to have you on, and I'm always open to hearing all sides. And you have to hear it.
You have to show.
Yeah, I mean, you have to hear all sides because there's a few things that I wasn't considering a half an hour ago that now I think are worthy of thinking about. So
yeah, that's all we do. Listen, a market is 2 views, right? Is opposing views. You can't have a market without opposing views. And that's all I'm trying to throw out there.
Yeah, I wish our government would get back to governing instead of prosecuting.
Yeah.
And get some things done. And, I think that goes across party lines. Let's get America back to work and, end this, it's almost like we have become a entitlement riddled economy. I'd like to see America come back to the way it could be. And, there is an awful lot of stuff going on that, a lot of attacks on different ethnic groups and nationalities that really scare me because it's not the America I grew up in.
No.
So anyway, I'd rather have you as a guest than Jesse Ventura any day. Someone just mentioned Jesse Ventura. So Charlie, have a great weekend.
You too, my friend.
I thanks for sharing your work with me on Twitter. I get it out there, and
thank you.
I think that you and I are an example that we could have opposing views and be civil about it, and not have any vitriol happening while we come from different places, but we're open to listening, and that's the key.
You got it.
Thank you, Charlie.
All right, Dale, be good, my friend.
All right, that's a wrap, everyone. Hope you had a good NFP, and we got a decent number finally on your appearance. You notice I bring in on the NFP. Charlie. So we finally got a decent number. So
all right, sounds good to me.
All right, man. I'll talk to you. We'll talk next month.
You got it.
All right. That's a wrap, everyone. Have a great weekend. Okay. Adios. You could catch a team. They're going to be doing the morning edge. Cheers, Paul. They'll be doing the morning edge in 11 minutes. Adios. Thank you, Rick. Thank you, Ben. You too, buddy.